Welcome to the Rim Break Rodeo. We hope this video helps.
In this video, I will explain how to use debt to buy assets. Start by evaluating your income, expenses, and existing obligations to set a safe leverage limit. Compare interest rates and loan terms across lenders to find the best fit. Prioritize loans with predictable payments and tax advantages. Always stress test your plan against vacancy, market dips, and higher rates, and keep reserves to ride out short-term shocks. When choosing assets to buy with debt, focus on predictable income streams and durability. Model worst-case scenarios including vacancy, maintenance, and rate increases. Use conservative appreciation and income estimates to avoid overstretching. Diversify across asset types to reduce idiosyncratic risk. Keep clear metrics like cash-on-cash return, debt service coverage, and break-even points to guide decisions before signing any loan documents. Manage debt with discipline by prioritizing predictable payments and clear repayment paths. Use amortization schedules to plan principal reduction and monitor equity growth. Avoid overly aggressive interest-only or balloon structures unless you have a reliable exit. Refinance when beneficial, but factor in closing costs and timing. Keep loan covenants and personal guarantees in mind, and maintain a buffer so a single setback doesn't force distress selling of your assets.
Thanks for watching. Consider subscribing if we helped you.